And you know when it's time, we hit that button.
Fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Here we go. Welcome everybody to the show. We got MLO, we got our new setup on the rip. Let's bring it around. Say what up here. It's my boy Christian. Oh, we got a funky new track.
We got a funky beat today.
God, and I ripped it on the high end of the volume. I'm just digging it.
Here we go. MLO hitting it hard today. Big beats.
We're bringing it strong. Bringing it real strong. We got the new layout. People are listening. People want it. People want to hear. Because we're talking about the truth here. MLO, baby.
Yes, sir.
Got a big topic, and we're going to bring it down for everybody listening and watching. Gosh, here we go. A closing inning. Yeah. Oh, look at this.
I'm losing the sweat.
Look at this.
Sorry,
He's getting hot. He's got to take it off.
We got a hot topic.
Hey, but it is some good stuff, though. I'm already hot. It's happening.
Now that Mr. Carpenter's undressed, we can get into our agenda.
Yeah. Look at how much I'm already sweating.
Oh, my goodness.
How's it going, boys?
Good. CK, how are you?
I'm good. It's another great Wednesday.
Yes,
know?
it is.
We beat the heat last week, and we're here talking about another hot topic and something that can pass on to all of our listeners. It's very important that we get this information out there.
I'm just cracking up because Casey.
Yeah, I'm over here just trying to stay cool, and it is not working out for me today.
He barely made the show on time. He was running down.
Yeah, seriously, I mean, if I keep my forehead sweating this much, we'll have a wet table on our hands.
You okay?
No, I'm sweating pretty good here.
We're gonna bring it. New layout. Oh my gosh, we are glad to have you back. So, guys, this is the MLO podcast. We appreciate everyone chiming in and huge support this week.
Yeah,
just want to bring that out, CK. Like the downloads, the shares, the
huge
reach outs. Like we really appreciate it, especially as we commit. This is our favorite time of the week. We love committing to just talking about topics people want to know about straight up and no fluff, right?
That's right. Another week of what's happening in our news, what's going to affect our clients, our new home purchasers, and our realtors out there.
Yeah, and today we're going to bring down really interesting topic that kind of dovetails a lot of the other most recent episodes, and that's really the impact of low interest rates primarily on the first-time home buyer and the big picture of things, because we feel like holistically, and I'm trying to keep the cameras off Casey because it keeps swiping off his friggin'. Are you okay? Should we take a break on?
It's not working out. We're not getting any AC action over here, so it is a full sweat session. But we're gonna make this work because that's what we do at MLO. You grind through the pain.
The last episode, Christian and I were saying that we missed you, and I wonder if it's too late to retract my ballot.
Retract the same. Well,
one of the downsides of the mail-in, I guess.
You never know. Let me make sure my mug's right, though.
Get that logo in
There
place.
We go.
So everyone's settled. Everyone's in the nest. But going back, the truth behind low interest rates being used, guys, as a tactic to build urgency. So there's one thing like market conditions indicate low interest rates. We've all talked about that. Yeah, but as the consumer, a home buyer, home seller, we need to understand the larger impact of low interest rates and dovetailed that I used that before, but dovetailed with inventory levels, right, CK?
Yeah. Prior to pandemic, we were already dealing with a low inventory level for our first-time home buyers, our first-level purchasers that are getting into that purchase price between $280,000 and $400,000.
Mm-hmm.
It was very tight in that kind of that price point, and so now even more that we have millennials jumping into the purchase side of things due to just wanting more space, finding out that their job is even more reliable from outside of the office.
Mhm.
And just seeing what clients are doing that purchased in the last couple of years. Are they upgrading or are they, doing home improvements? So we're going to dive into how this is going to affect you in the future and why you should maybe get into the purchase market now.
That's a good point. I think, inventory levels, guys, is a big one. And especially in that starter home range. So I had a particular client who's probably put in 7 offers, and they're trying to buy in the Portland market at that 380 to 420 range.
Right.
And it's ultra competitive. And I've had people ask me, I was like, what's going to happen in the market? This and that. All I can say is, historically speaking, the minute Labor Day hits, Labor Day brings in a whole new factor to the buyer demographic, and that is people are back to school. The weather starts to get a little cooler, so paid time off isn't as exclusive or available. So
Sure.
You typically are going to see a decrease in offers. So people that might not be tied to school districts or family and moving on the timelines might want to consider, week 2 of September being a nice way to jump back in if you're in that bracket for your area of very competitive markets. So just wanted to note that there. But inventory is a big factor. With low inventory,
Low interest rates
brings in this dynamic of higher quantity of people being able to afford homes, right, Christian?
100%. So we are feeling that right now with our clients that are in that criteria of right where you bracketed that. And man, it's competitive. And what we're here to do is to show you different ways to show you strategies of how you can be successful in this market. But really what we want to talk about is how this is going to trickle down in the future for home buyers that are waiting. Because right now we have a lot of people that, have maybe purchased in the last 2-3 years that have a low interest rate, and instead of maybe upgrading, or when we see interest rates rise, instead of upgrading to a new home that's bigger, they may elect to stay put with their low interest rate, take out an equity loan, and do some home improvements. So what that means is there's less of those starter homes for our next group of people moving into that first home buyer process. And that's what the trickle down effect can hurt our clients in the future. And that's why it's important to get into a home possibly now so that you can take advantage of the low interest rates, deal some inventory, and still being able to do those decisions that I just talked about in the future. Need be making that into a rental, because now I have a 2.99 on a rental property. That's going to make it, break out in a plus, and you're able to start your portfolio and get more properties down the road. So yes, we are seeing these strategies and we're putting these things into play for our clients, and we're talking about these current environment so that our clients can take advantage.
Yeah, no, that's a great point. And I'm going to let Mr. Carpenter come in because I know he's wanting to jump off here. And
get something going.
Ready to roll.
Sweat rolling off my body.
What's your take? First of all, we've got many points to cover here, and we're going to try to be efficient, especially for people watching or listening. We want to hit that home and give you some nice insight. So,
right.
Yeah. And just kind of some of the conversations I'm having with clients, you have this time, right? It's low interest rates. It's a good market to take advantage of when you're looking at the financing side of it. So you have a lot of people jumping in right now and buying their first home or buying, another home. They're refinancing their existing mortgage or putting themselves in a really, we're seeing is some historical low financing rates, right? So they're setting themselves up for, hoping, this is maybe the bottom of the barrel, the lowest payment you can get yourself at, and you're comfortable. Now, though, the conversation for later is, maybe what is that market going to look like a handful of years down the road now? Because you're comfortable at this payment, but if this market changes and you have interest rates, increase and they go up, and then costs of homes go up, are you going to be able to and feel comfortable enough to upgrade into that next buy later on? Because that's kind of the question right now. I think people, should be asking. Those are things you need to consider and factor, because if you're getting comfortable with your current payment and stuff like that, and then everything changes going down the road, are you going to be able to actually upgrade? You know, or are you going to be able to actually find a house too if the inventory
Great
shortage is still there? So we're getting into these conversations, which are good to have with your clients. And
well, I think one of the bigger things with inventory though is like, first of all, in the early pandemic, Casey, people are really afraid to even allow people into our homes. And then in some markets, and us being in the Oregon and Washington split, you know, Washington was on pause for a short amount of time. We were not, but it's a big factor. People are now comfortable once again opening up their homes. Now it's different, you know, they're going to Clorox wipe the crap out of the house and it's going to be scheduled. But that being said, there's more kind of open-mindedness, no pun intended, on allowing people into the homes.
Yeah, for sure. And it's something that I'm trying to get clients to just think about, or at least consider, because you're getting, you know, if you're a first-time home buyer, you're getting yourself set up for, you know, this payment, you're getting used to it and stuff like that. But you're most likely going to buy another home some point in time, hopefully, maybe. And so being able to kind of gauge yourself on that market when it comes time is a big factor. You know, did the interest rates rise? Did the home prices, you know, increase? And now, do you feel comfortable getting a new house with a different payment, because we've been used to these low ones? So how is this market changing people for later on? It's just something we're trying to dive into.
Yeah, let's bring that back.
Unpack.
And I'd like to bring that back to Christian though. Like, let's just identify some ranges though on lower interest rates. Like on a $500,000 loan, you're looking at a year and a half ago, it's probably $200 to $300 cheaper just on principal and interest. So that is a huge impact. But then you're seeing a counterbalance, right? To where there's this huge expectations from sellers. And this one client that I had, she got an amazing offer. It was well over asking on the sale of their house, but then on the purchase, it was hard to digest that they were hopping into the same market that they just benefited toward. Have you experienced that as well?
100%. I think that's something that a client that's selling their house looking to upgrade is really digesting. You know, does it make sense? Because I don't have a lot of pull once I get, yes, as a seller, I'm making all the rules, right? As a buyer, you're kind of in the position that you're going to take what you can get, you know, in a sense that this is where we're at in this condition. And so what is that doing to our clients that are on the fence? You know, I think a lot of people are staying put, you know, they're looking at refinancing instead of purchasing. And they're taking advantage of the low interest rates, back to what I kind of talked about. Now, they may wait until, you know, after the elections and everything else to see where everything pans out and where rates will go. But I think the strategic thing is right now, and we're seeing it through all types of analytics, even just with Home Depot, Lowe's, and some of our home improvements. So we're seeing, you know, a 200% increase in paint, lumber, fence, decks, and those type of things. So we're seeing people dig back into their equity, pulling that out, making it more comfortable for me. You know, I'm going to spend all this time in my backyard on my laptop. I'm going to spend $25,000 on this remodel in my backyard, so it's nice oasis for me. So we're seeing a bunch of different things happen. Different evaluations.
Yeah, it's a mixed situation, because you're like, say you're at like 5%. And you could refinance to 3% and lower your monthly payment by $200 a month. They may be like, oh, well, I'll refi, and then I'll put all this stuff on a credit card or take a home equity line of credit, also known as HELOC, out and do the improvements that you're speaking of, right?
Right.
And like, oh, well, maybe our house works.
Yeah.
Maybe it just works, because moving is hard for some people.
Well, I think they're scared. They're hearing this, that there's not a lot of inventory, or they're looking. They're actually looking out there, seeing how fast things are going, you know,
super fast,
you know, so we're seeing houses be listed on Thursday and Friday, and on Monday they're pending. You know, if it's priced right, they're going just like that. Offers. So I think that scares some people that are looking to upgrade. And that's why we're talking about this topic today, is how is this going to affect everybody down the road? Because people are pulling equity out, improving their homes, staying put. And that's why I want to get this information out to our viewers and our listeners out there today, so that they can understand maybe this is the right time. Maybe I should jump off the fence so that I can get that first one down. Check out our episode on acquiring properties.
Mhm.
But this is that first step because interest rates are so low. I could still get into a house in this range. I just got to be strategic on my offer and everything else and get with a awesome loan officer that's going to help me get there. And then I can have a game plan down the road of how I'm going to execute on the next property or whatever it may be. But I think that's why this topic is so important to kind of get out there, is because I think it's going to impact a lot of buyers down the road.
Wow. Yeah, I feel the passion. That's
Yeah.
super well said. And to kind of throw it over to Casey, because you and I were talking about this, Casey, regarding people who already have achieved a low interest rate on their current home, that might prevent them from wanting to upgrade. They might look at their home from a completely different view than they did before. $200-300 in monthly payment makes you look at your house a lot differently, wouldn't you say? Like, I know you were telling me a few stories, so elaborate on your experience and that payment differential.
Yeah, for sure. And you know, if you're comfortable at your $1,500 payment, and let's just say, you know, times have changed, we're a couple years down the road, and now that's, you know, $1,800-300 difference, right?
Mm-hmm.
For you as a buyer, you also need to understand your income as well, right? So the $300 could be a big make or break for you just in your monthly comfortability, you know, for your payments. But going forward for people, you know, if they're in their house right now or they're thinking about buying later on, as financing increases, as interest rates, you know, increase, if they do, and that $300 difference, you know, is your payment, are you comfortable with it where your income's at? Because are you making an extra $5,000 every year on top of your income, just gaining you steady different salary amounts? Maybe not.
Mm-hmm.
So you really need to consider your income as it is kind of now, and if you know how it'll grow, and then factor that into your comfortability with the payment. Because yeah, I mean, if $300 is a big make or break for you on your payment, then people probably aren't going to move. They're going to stay put. And then that's going to factor into your buyers that maybe didn't buy right now and are looking to buy down the road. Well, guess what? That house that maybe these people would have sold and then bought another one, listed it, they're not going to list now because the payment, they don't want that $300 increase. So they hold put, right? And that continues that inventory issue where,
Right.
So that's something I think is it's that monthly payment change, because, we can't say for sure it will, but most likely there'll probably be a change later on. So monthly payment change. And then can you afford that new payment, or do you just want to stay put? And how does that affect our inventory for people trying to buy later?
Mm-hmm.
Well, I think we've actually seen this happen between 2013, 2018. We've seen low interest rates. Let's face it, guys. We've had low interest rates for a long time.
Yeah.
And so we already seen these trends of people staying in their house longer because they're in a nice fixed rate. We've already seen it. So we know that this is going to happen. We know this is going to affect inventory going forward. So the next question is this a good time to buy for a first-time homebuyer? What are we doing? Well, we do have a lot of stuff going on. It is a great time to buy. We do have home builders building new homes, new subdivisions. And there's lots of opportunities. We have urban sprawl. We have a lot of things going on. So I'm not saying, yes, if you want to be closer in the city, it's going to be harder, tougher to get that offer in at that first price point.
Yeah.
What Addison talked about, that 280 to 420 range. It's a tough market. But as we go outside our immediate Portland metro areas, Aloha, Forest Grove, we're seeing some beautiful homes. We're seeing some great communities being built. And, we are going to have to wait for that inventory to catch up, and we're going to get there. So I say, yes, it's a great time to take advantage of low interest rates and get into some of these other markets that are maybe outside the immediate Portland market, and get into that next home, maybe closer in down the road. But don't be gun shy. I want to say that 100%. Take advantage. If you can, talk to one of us, talk to your MLO loan officer. Let's talk about strategies, putting in some different things in place in order to achieve what you're trying to get to. But don't be gun shy. Talk to us. We'll come up with a game plan, because home ownership, there's so many advantages. I'm so pumped up about getting people into homes this year, because low interest rates, tax benefits, get you out of an apartment that's next to somebody. I mean, we're all trying to be safe out there. As you can see, we're doing our 6 feet of distancing right now.
Mhm.
But, everything's been flipped upside down, right, guys?
Yeah.
Everything's been flipped upside down. Our job is to just find ways to educate, get people into homes, make sure that they know exactly the right time to do it. Well, we know interest rates are hella low right now, right?
Very, very low.
Yeah, I'd like to hop in and just throw down because, I've gotten a lot of questions like, where do I think interest rates are going? And truly, in my opinion, like, first of all, it's a pandemic year. It's a fragile economical state, not only within the United States, but the world. So in the USA, particularly, our economy is directly driven to the cost to obtain financing to do business. And business meaning small business, auto loans, retail fronts, real estate, commercial or residential, everything, schools, credit cards, you name it. Everything is tied around the interest rate. And to top it off, the freaking federal debt. The country's debt is tied to interest rates. So if we move into an inclining interest rate market, what's that going to do? That is going to anchor the progression or even flotation of the current economical state. Can't happen. Can't freaking happen. So if anyone's trying to, going back to the subtitle, now I'm picking up my voice and bringing it to an octave level we haven't heard on this episode because I get passionate about people bringing forth the BS notion of like, this is great, movement, urgency. They're using it as a sales tactic. Just yesterday alone, I had multiple conversations with people with like, hey, it's all about timing. From my network and professionals that I trust and respect, interest rates are going to remain relatively low for 5 to 10 years. So don't freaking panic because it's not only timing with the financial side of things, it's timing with your family and it's timing with what works for you and your career and what makes sense. So I guess one of the heartstrings for me is like, don't let some joker who posted on Facebook, I can't believe how low interest rates are. Are you kidding me? They're not surprised. They're trying to get you to contact them to do some sort of refinance or this. And it just freaking pisses me off. And I'm really sorry. And I'm like sidetracking Casey, but that shit gets me.
It's because we're passionate, guys, and we're passionate about the people we help and the families we help. And we're trying to give you guys as much information as we know, if not more than it, so you can be honestly better educated than we are at this game. So you can just make the right financial decisions. And like Addison's saying, I mean, we're not here to shove low interest rates down people's throats. We're here to use what we have in market and tools to set you up for success. And yeah, interest rates definitely help that. But sometimes it's your family dynamics. It might not be the right time, and we're going to find that out through the conversations we're going to have. And we're here to, support you and your family together in this journey. So it's not just a sale for us. This is a transaction we're trying to make lifelong for you to set you up for the next one. And the next one after that.
There's a lot more to it than just like the timing of the family. It's like, say you've got a 610 credit score, right? And you've got some internet lender trying to jam down your throat, like interest rates are never going to be better. And like, there's a fee assessed last Friday, which, CK and I did an episode on that for refinancing, but there's people out there applying that entire approach to purchase when it's not even a factor on the purchase side. And it drives me nuts. And I just get so ripped up on it because it's like, are you kidding me? I saw 17 posts from mortgage advisors in the Pacific Northwest trying to bait people within their network on low interest rates. And it's like, that's the laziest networking and marketing I've ever heard, because if you listen to anything on the MLO podcast regarding interest rates and how they're determined, the main factor being number one, your credit score, and number two, the down payment, number three being the product you select, you will understand that is all a bunch of nonsense. So it really gets me pissed off when I'm scrolling through my feed and I see all these people that I used to love, trust, and care about from a digital perspective try to mask it over and just Like, dude, do the right thing. Explain to people. It's like, look, yeah, interest rates are low. Here's the summary, guys. Here's what's going on. A lot of people are either refinancing, as Casey or Christian said, their $3,000 payment might now be 27. They're looking at their current home a lot differently, right? So they might not move, which decreases the inventory.
Yes,
So we have a decrease of inventory, right? First-time home buyers trying to get in. We have a supply and demand issue in the United States. There's just not enough inventory for what the people need. So home builders need to start building either more first-time home buyer houses, or people got to jump in, and it depends on what your comfort level is. I mean, it's just a big thing to me. I mean, particularly with the subject line, Christian, and I'm going to bring it over to you because I'm running out of breath, but like the false identity of urgency just pisses me off.
Yes, you and I have talked about this
Yeah.
multiple times. We talk about it all the time.
Everyone knows how to get me rallied.
Yeah. So, and
might have
it's
a-
funny because a lot of clients will be like, I'm ready. And I just want to like pump the brakes a little bit. If you just wait a little bit, we work on this and that, we can put you in a way better situation. Now, that's up to the client if they want to take my advice or not. And if they really find that house that's going to meet their needs, we're going to get them in there, of course. But if you have time on your side, which is give me 90 days before this purchase, just give me 90 days so that we can go over all these factors. I could put you in such a better position and such a better, criteria, idea, what home ownership should be about, that you're prepared for everything from your home inspections, the cost of that, to what prepaid items are, to what closing costs are, to be strategic with your interest rate. If I bring in 3% versus 5%, maybe I should save for that extra 2%. There's so many different things, and that's going to be dependent on the individual. And that's why it's so important to talk to Casey, Addison, or myself right up front. Just give us a little bit of time before your purchase so that we can get you prepared. Boy Scout motto, always be prepared. That is so true in so many different factors. You just don't want to go out to the woods without a tent, flint and steel, water. You're gonna die.
I don't go camping, by the way.
You're gonna die out there. So
It's more of a glamper.
Yeah, whatever. If you don't have your 4-wheel drive vehicle and your trailer, and you got that with no hookup, same thing. You're just out there in the woods. So that's why we're so passionate about this conversation of homeownership, being prepared, knowing what's out there, and the tricks and the trades of homeownership.
Yeah, and just kind of bring the plane down a little bit, and then I got all rant up there, but like,
it's what we do.
It just really frustrates me.
It's what we do. We're passionate about our jobs. We want to get people into homes. We want to make sure that everybody that's refinancing right now is checking all their hot lists. I want some cash out. I want to pay off debt. I want to lower interest rates. Let's make sure we hit all those things, and let's get you prepared for that. And maybe 45 days before we get you there, let's just make sure that you're in the best position when you do a transaction to execute. I mean, that is so huge. It could cost you tens of thousands of dollars over a 30-year period. So that's why we're so passionate about just making sure that you're prepared, understand everything that's involved with a home mortgage. But it comes back down to the same simple things: credit score, down payment or loan to value,
product selection,
and the product selection. So let us help you make those choices or advise you on what's available. And we can show you the steps to get there if you're not ready to go. And so I'm passionate about it. I know Addie is. My boy Carp is. So
all day.
I think I need some music right now.
I would take a little.
Doing some things that I know you haven't heard
Take a little
before.
stretch ripper.
1, 2, 3, listen.
I feel like with Casey, it's like the Jumbotron at an NBA.
I know.
Yeah.
Where's the kiss cam?
He's on.
We have the kiss cam.
He's on there. He's on there. Wave your side. Now we're showing off tattoos.
We get all worked up.
Isn't our job awesome?
Wednesdays are my favorite.
Wednesday is my favorite day of the week.
So we're gonna bring this little beat down to a rip and the subtle. If you guys ever want to get a hold of us, if the MLO team could be of any service and you're planning to purchase a home, sell a home, whatever it might be, refinancing, we are fully here to support you. So there's multiple ways to get a hold of us. You got to reach out. Nothing changes until you reach out. So
That's right.
Let us know. There's no cost to our service. Question I get all the freaking time. How much does it cost to talk to us? How much does the Zoom call?
Zero.
How much does it cost to do a credit report right now, Casey? Tell them.
Zero.
A big zero. We don't even have a bottle deposit return.
That's right. Not even 10 cents.
That was a drop down. It's 10 cents in Oregon, but it's only 5 in others. But yeah, hit us up on that VIP number. We are available across the board. Direct message, text, VIP number. You know how to get a hold of us. Maybe it's not the right time, guys. Maybe you don't feel comfortable. Maybe you're shy. Whatever it is, subscribe to that podcast, right, Casey?
Absolutely. I guarantee it will change your mind of real estate. It'll help you become more aware and adapt to this environment.
Oh, be careful. I use that word guarantee. You might be handing out free t-shirts on your dime.
That's true. I'll give you an MLO shirt all day.
Yeah, where can they grab the podcast though?
You're going to grab your podcast on wherever you jam at, iHeartRadio, Apple Podcasts, and Spotify.
I am so impressed you nailed those 3. That's the first time in many episodes.
I know, because I always call it Apple iTunes is what I always call it.
It is iTunes, isn't it?
It's one or the other. Wherever you grab your podcast, they're there.
That's right.
We are rocking and we're on the top.
And our YouTube channel is just cracking.
YouTube's a cracking. If you're on YouTube, guys, if you search that, do us a big fave. Like, hit us up, subscribe to that little button.
Please subscribe.
Yeah.
Like it,
below.
Subscribe.
Yeah, our vision is to pull together some shorts.
Yeah.
Joshua Billups, the most amazing producer for MLO, and anyone I've met, he's cranking it out for us. So we have a lot of content that we're bringing on. But without your commitment to subscribing and helping us out, we won't be able to continue that, right, TK? So help a homie out.
Yeah, please like, subscribe the YouTube channel. You'll get updated for all of our next episodes, so it helps you out as well.
Yeah, and we got your back whenever it comes to financing your next home sale or home purchase here at MLO. Wow, that was our best. Nailed it. Gosh, Christmas is around the corner. We better do some caroling.
That's right.
All right, so that was our little break. That felt good to stretch and hear that little theme music, get the blood reflowing. We all know I got on a high there, so I apologize, but it's very personal to me, guys. Don't be pushed by that first call. Work with someone that you care about and understand that timing is everything, not only in mortgage but in life. And don't be pressured into doing something with false information. So just to bring it back together, if you're just hopping in on the episode, whether it's Facebook, on our MLO podcast website, or you're listening to the episode, we have been talking today about the truth behind low interest rates being used as a tactic to build urgency for home buyers. So we've been disclosing the pros and the cons, the truths, and maybe the not so much truths. I hesitate to use a lie about that statement. But in summary, guys, low interest rates are bringing cross considerations from homeowners, either looking to stay in their homes because they can refinance, right, CK? Or they could sell and move to something bigger and better, but it's
the upgrade buy. We call that the upgrade buy. I like the cross consideration of the client. We're in a cross consideration stage, guys. Are we going to stay or are we going to buy? I mean, that's a great way to put it, but how will that affect people in the future buying homes?
It's going to be soon to see, because we do know that interest rates eventually will go up. Is it going to be 2, 5, 10 years down the road? We don't know. We are in a pandemic, economic recovery right now, and we know right at this instance where interest rates are at. So get with your MLO loan officer so we can be strategic about your home purchase, refinance, and any kind of a big purchase that you may be doing in the future, so that we can be strategic about what that monthly payment would be and how that might affect your future purchase and refinancing down the road.
Yeah, I think kind of to bring it back to an end chapter is It's going to be a very interesting next 6 months. So the pillars of things you have to consider. We've got Labor Day. So it hits, kids go back to school, whether it's digital or physical, it doesn't matter, right?
Right.
Doesn't matter. School starts, the weather starts turning, less people want to move, less people have paid time off, et cetera, et cetera. So your aggressive markets, your hot markets are going to show a lot less competitiveness. Like,
Presidential election.
Boom.
3.
You cut the line at Costco, but that's okay. I still love you. Yes, presidential election, right, Casey?
Yes, sir. And what happened last time? We saw an agenda change and interest rate hikes getting put in place. So it'll be interesting to see.
So who's going to bear the responsibility of where the interest rates go? I think they're going to remain. You might see some blips. I call it the tug and pull. Right. So often there's 1 step forward for 2 step back, or 2 forward for 1 back. But be patient. Timing is everything in the home buying and home selling process, guys. And I think 2021 holds a huge unknown for everyone, Christian. Mainly, we've got commercial real estate has been flipped upside down. Occupancy rate for businesses and leases have dramatically dropped. So what's going to happen? What's going to happen to those commercial spaces? Are we going to go mixed use? Are we going to revert them? Our county code's going to change. Our huge buildings, such as condos, going to have another flip of the supply and demand.
Yeah.
So who knows?
We got a lot of things that may happen in the future, and it may be driven by the commercial real estate side of things. And with us having less inventory, needing lower income housing, I think we will do an episode on that here shortly on what may happen with some of this commercial real estate and how that may be converted.
That'll be a good one. And before we kind of wrap out and put our tail in, anything from you, Mr. Carpenter?
No, I just think, like I always kind of preach, it's important to get with your MLO loan officer or loan officers that you trust and just have those conversations, because whether you're buying now or refinancing now, you need to know what your options are, and you need to know what possibly could be out there in the future for you. Now, it still is unknowns, right? We don't know if the world's going to crash from 1 year from now, but you don't want to go in there blind. So getting with your loan officers, finding out the information today, what's out there tomorrow, it's going to set you up for success.
It's definitely going to set you up for success. And it's never too late to start the conversation. Get it going, answer them all, get the conversation going. If there's anything that you need to address, whether it's credit score or savings or questions like that, we got your back here at MLO. And we truly do appreciate all the support. We're asking people to help us out with that YouTube because we're just getting it going, but the podcast, the Facebook, unbelievable outreach. But make sure to go on there, find us MLO, and start subscribing, because we want to keep Josh busy. Joshua Billups, awesome, our producer who revamped this entire set to be compliant to our state requests for the mandate of 6 feet or whatnot. So we
follow rules, guys.
Keep them going, and I'm gonna
doing some things that I know you haven't heard before.
And give it to me.
2, 3, listen.
Let's do it around the horn. Oh yes, Casey's giving us that shimmer shake. The salt and pepper, I'm gonna call that. We're gonna climb out of the toast and bring it back. Yeah, we truly appreciate it, everyone. And man, hit us up, be real. Once again, I'll start it with Casey. Go ahead and say you're out.
Thank you for listening, everybody. Casey Carpenter out.
Mr. Kemper.
The only thing I want to say today is every home buyer starts with a conversation with CK, Addie Nett, or Casey Carpenter. It always starts with one conversation. Next thing they know, they're in a home. So give us a call.
I like that. You did really good today.
Yeah, you crushed it.
Kempers gets the anchor badge.
Appreciate it.
Once again, you have been listening to MLO. I am your host, Addie Nett. Hit us up. Let us know. We get you back when it comes to home buying, home selling here on the West